All right, everyone, let's dive into one of the most important standards for your CA inter exams, AS18, Related Party Disclosures. Now, this is one of those topics that shows up all the time, and it's where a lot of marks can be won or lost. So let's make sure you absolutely nail it.
Okay, let's kick things off with a classic ICI trap. You see this question, maybe in an MCQ, and you're probably thinking, yeah, common director, they've got to be related, right? But wait, it's not quite that simple. This is exactly the kind of nuance AS18 tests, and it's where so many students lose easy marks. We're going to find out the real answer very soon.
And this really gets to the core of why AS18 is even a thing. Look, in the real world, companies don't always deal with each other at a fair market price, what we call an arm's length basis. When you're dealing with a related party, you might get a sweetheart deal or maybe get services for free. This can seriously mess with the company's true financial performance. So the entire goal of AS18 is to pull back that curtain and make sure everything is out in the open. Okay, so first up, let's talk about the why. Why do we even care so much about these relationships? Well, because they can totally influence a company's decisions, even if no money ever changes hands. Think about it. A parent company can just tell its subsidiary, hey, you are not going to do business with our competitor, right? That decision hits the subsidiary's bottom line, but there's no transaction to record. That's the kind of invisible influence AS18 wants to shine a light on.
All right, here's the official definition, and you've got to pay close attention to the wording here. It all comes down to two magic words, control and significant influence. But look at that other phrase, at any time during the reporting period. This right here is a massive exam point. It doesn't matter if the relationship only existed for a single week or even a single day of the financial year. If it was there, it counts for disclosure. You have to remember that.
Okay, so we get the principle. But in an exam, how do we actually spot a related party? The good news is, AS18 doesn't make us guess. It gives us a very specific list that we can basically use as a checklist. So let's break down who makes the cut.
Okay, this slide right here, this is your absolute go-to for identifying these parties. Let's run through it. Step 1 is your basic family tree of companies. Parent, subsidiary, sister companies. Simple. Step 2 adds in associates and JVs. Step 3 is about the big bosses, the individuals who own enough to have control or significant influence, and, this is key, their relatives. Step 4 is similar, but it's for the top management, the KMPs, and again, their relatives. And then Step 5, now this is the one that people always seem to forget, any other company that those individuals from Steps 3 or 4 have significant influence over. Seriously, you need to know this checklist inside and out.
All right, now let's flip this around and look at the other side of the coin, which is just as crucial, especially for your MCQs. You know, ICAI absolutely loves to test you on what is not a related party. Getting this negative list right can save you from some really common and costly mistakes.
And here's that list. And look, right at the top, there's the answer to our first question. Two companies are not related just because they share a director. The only exception is if that director is in a position to influence the policies of both companies in how they deal with each other. It's a fine point, but an important one. Next, even if one customer makes up 90% of your business, that economic dependence alone doesn't make them a related party. And finally, your bank, your trade union, the electricity company, these guys aren't related parties just because you do normal business with them.
Okay, let's get into the real technical stuff now, the engine room of AS18. These are the definitions and rules you're going to use in your answers to prove you know what you're talking about. Getting these details right is absolutely key to scoring well.
So you have to know the difference between control and significant influence. Think of control as being the king. You own more than 50% of the votes, you can hire and fire the board, you make the rules, period. And one quick note, control under AS18 is actually broader than under AS21. Now, significant influence is a step down. It means you have a seat at the table, you can participate, you can influence the king, but you can't give the orders yourself. And the magic number here to remember, 20%. If you've got 20% or more voting power, we presume you have significant influence.
Next up, KMP, or Key Management Personnel. So, who are these people? Well, think of the top dogs, the managing director, the CEO, the whole-time directors, the people who actually plan, direct, and control what the company does day to day. And here's another classic ICAD trip-up. A non-executive director is not automatically a KMP. They have to actually have that hands-on authority.
Now, there are a few situations where you actually get a pass on these disclosures. One, if another law, like banking secrecy, says you can't disclose it. AS18 won't force you to break the law. Two, in consolidated financial statements. Why? Well, because you're treating the whole group as one big company, so all the internal transactions just cancel each other out anyway. And three, government-owned companies don't have to disclose their dealings with other government-owned companies.
Okay, enough theory. This is where the rubber meets the road. Let's apply all these rules and see how you actually score marks with this stuff in a practical problem.
Let's start with a pretty straightforward control chain. First case, A controls B and B controls O. That means A has ultimate control over O, so they're related. Easy enough. Now check out this second one. A Limited has 22% in C Limited directly, but its subsidiary, B Limited, also holds 30% in C Limited. You add them up, and A effectively controls 52% of C Limited through its direct and indirect holdings. So bingo, that's control, and C is a related party.
All right, time for something a little more complex. This is the kind of diagram you'll definitely see in your exams. We've got this group structure, and our task is to figure out all the related parties from the perspective of R Limited, right in the middle there.
Okay, let's break this down from RLT's point of view. PLT is way at the top, so that's the ultimate parent with indirect control. QLT is R's direct holding company. SLT is also controlled by Q, making it R's fellow subsidiary or sister company. XLT is easy. That's R's own subsidiary. And YLT? Well, since S controls Y, and S and R are under the common control of Q, Y is also related to R. See? You just have to follow the chain of control piece by piece.
Okay, remember that at any time during the period rule we talked about? This illustration is why it's so important. So Andy, the MD's spouse, worked for the company, but she only worked for 3 months and left on July 1st. The question is she a related party for the whole year ending March 31st? Yes, absolutely, because the relationship existed during the period, it counts for the whole period. I'm telling you, this is a huge trap students fall into all the time. ICAI loves this stuff.
Okay, this next one is a brilliant point. It really tests your understanding. We said that a bank is normally not a related party, right? But in this case, the bank also owns 23% of the company's shares. That 23% holding presumes significant influence. So you have two rules clashing here. But the specific rule about significant influence always wins against the general exemption for providers of finance. So in this case, yes, the bank is a related party.
Okay, so we know how to spot the parties, we know the rules. So what's the last piece of the puzzle? What do you actually have to write down in the financial statements to get full marks? Let's go through the final checklist.
Listen up, because this is probably the single most important rule for disclosures. If there's a control relationship, like a parent and a subsidiary, you must disclose that relationship. It doesn't matter if not a single rupee changed hands between them all year. The very existence of that control is so important that shareholders need to know about it. Do not forget this point.
Okay, but what if there were transactions? Well then, this is your checklist for getting all the points. You need to name the party, describe the relationship, explain the nature of the transaction, give the amount, list any outstanding balances, and mention any provisions or write-offs. If you include all these points, you're pretty much guaranteed to have a complete answer.
So what kind of transactions are we even looking for? As you can see, it's a pretty wide net. You've got the obvious stuff like buying and selling goods, but it also includes things like leasing, providing loans or guarantees, transferring research and development, and even management contracts.
All right, let's wrap this up with one final question to really lock in the concept. A holding company tells its subsidiary to stop dealing with a competitor. There's no invoice, no payment, nothing. Is any disclosure needed? And the answer is a big yes. You still have to disclose the control relationship between the holding company and the subsidiary. And this scenario shows exactly what AS18 is all about. It's not just about the money that moves around. It's about the potential to influence. It's about that hidden power. Once you get that, you've totally mastered AS18.